Hello, and welcome to the stock-specific class here for Thursday, January the 20th. There's a lot going on over the last few days. We'll take a look at the charts here in just a second. As far as the direction alerts, though, we have seen with the market selling off, them moving to the left side of the slide bar. Momentum is at an extreme oversold area. This is that's why it's not surprising we're getting a little bit of a bounce today, because we did kind of drop a little bit too far too fast, and sometimes you'll get a little bit of a rally or bounce there. But I don't think we're in a spot here for the market to rally all the way back up. I think we want to be selling these bounces, and I'm not doing any shorting in the class, but I would be taking on bearish trades if I was either shorting or buying put options or something like that on some of these rallies, because we probably have a little bit further to drop. I made the case for that a little bit on Tuesday. We'll take a look at some of the charts here that kind of back that up a little bit here. But so we could, like I said, this will probably move a little bit to the right because the market, with the market rallying a little bit today, although it is a little bit of a weak rally, which we'll take a look at here in just a second, but it could move a little bit to the right. The breadth indicator is still kind of in the trending area, but it has been moving towards the left as well. And sentiment actually has backed off a little bit off of the extreme area. It's still high though. And again, this is part of the reason why I think that maybe we can see some further downside, is because on each of these sell-offs, we're just not seeing any panic, and yet we're showing levels where we're just kind of stuck in a range where the buyers really aren't, or the professional traders really aren't seeing a reason to push the market higher or be aggressive with their buying at the current high levels. Now that can change. I kind of pointed this out on Tuesday, showing you the kind of the psychology behind price movement and what can cause buyers to be willing to pay higher prices for stocks. With the earnings season kicking off, it is possible that earnings come out better than expected, and these professional traders, based on their calculations, see that the market could move much higher from these levels, and they could start aggressively buying again. But until I see evidence of that, I'm assuming the opposite, that they're not going to go much higher than these levels, which means that they're going to be looking for reasons to sell, and any sort of negative news that can come out, that we could see some pretty heavy selling, and we really need to see that sentiment indicator back off of the extreme and the high range there. See a little bit of fear enter the market. Have the market come down to levels where we can establish a more consistent uptrend, and that's why I've gotten out of almost everything in the portfolio. I'm only holding one stock right now. We'll look at that here in just a second. I might add another. The oil sector seems to be holding up okay so far, and if the market does bounce here around a little bit, that might be an area or a sector that does participate with it. There are on the buy-sell ratios here, we are seeing them widen out a little bit, with the sales outpacing the buys. The sentiment indicator is down near the lows here, so it's in an area where showing the market is in an oversold state. Definitely could bounce here or get a rally for a few days or something like that. But then again, I've seen when you get these big sell-offs with all these indicators, they'll move to the left side here. You'll get momentum on the left side. breadth on the left side, and they go right to the far left, and the market can continue to sell off for a few more days. I mean, you can stay in these extreme levels for a period of time. Same with the bullish extreme as well. So so that doesn't necessarily mean that we can't still see just a big flush out sell off that could take place within a few days. I just don't see anything in the charts right now that would that really would cause me to believe that we're going to have a significant rally from these levels. You can also look at another extreme, a bearish extreme here on excuse me, on the buy-sell ratios on the indexes. I told you look for a bullish extreme. You're looking for double-digit ratios, 10-to-1, 12-to-1, something like that. We got the opposite here. Take, for instance, the Dow Composite. You've got twice as many sells versus buys. So anytime you're at 0.50 or lower, it means that you've got a lot more sells than buys. And that's showing an oversold extreme. And that was already showing up on those other indicators, but this is something else you can check here to kind of see that. Can everyone hear me okay? I had somebody comment that they weren't able to hear. I'm assuming that everyone can hear me okay, or I'd usually get a bunch of people telling me they can't hear me. So it might just be that person's phone connection there. All right. Let's take a look at the charts here. And let's focus first on the S&P. One thing I was pointing out, and again, for those that are maybe new to the class today, there's a trend line that we broke. I mean, you can come all the way down into here, but basically went up through this area right here. We broke through that. With the attempted rally today, we might be trying to rally up a little bit back towards that. But we also broke below. Yesterday, we broke below this horizontal. This was a previous all-time high. We broke through it right here. It came back and tested what used to be the ceiling, became the floor. Tested it again right here, and we broke through it yesterday. So, you can't ignore that. If this market was, if today's rally was a healthy rally, and we're going to end up going higher, much higher, it shouldn't have broken below those levels. And you can say, well, it broke below it back here. It broke below it and came right back, and it did rally off of that. But look, it didn't go much further. Again, that's what I'm talking about. This is what I was pointing out on Tuesday, is that we reached a level right here, and then the professional traders weren't willing to push the prices higher. Why is that? Well, again, I used the analogy of a stock that's at $20 that you think is going to go to $50. That's your perceived value, or that's your perceived level of where you think it could go. Well, obviously, you're willing to buy it at 20 if you think it's going to go to 50. If it jumped up to 25, you're still going to buy it aggressively, because you can still see that you're going to make a lot of money as it goes to 50. Even when it's at $30, you still can make $20 going to 50. You're going to be an aggressive buyer. But as you get up here around, 40, let's say $47, now you're only perceiving to make $3 if you buy right here. And so if that suddenly jumped up to $48, you're not going to be an aggressive buyer. You're not going to be willing. You're going to really be struggling to pay that extra dollar. You're going to avoid paying that extra dollar because it's cutting into your perceived gain. You don't think it's going to go up much higher than that. and so you're not aggressively buying, and so you can see it, the buying slowed down right into here. Now, what happens if the stock then dropped down to sold off and dropped down to 30 again? Well, now you might be aggressive again, because you can see that there's perceived value there. You can see where you can make money, and you buy it back up. So here it dropped down, it came back up to those levels again, and what did it do? It stalled. This is showing us that for some reason, and again, we don't even know the reason why that's perceived as being the level that the market should be at, or what have you. Because we're assuming that professional traders obviously are moving the market, that it's probably based on valuation, some sort of computer program that's analyzing valuations of all these different companies, and they're all the fundamentals of the companies. That's what I'm saying. Let those professional traders do all that analysis for us, but because what they're doing is going to show up on the charts, and it's showing that it's stalled out right here. Now, again, it dipped back down. So in this analogy here, it came back down to 30. Now, in this case, it came back up to that 50, let's say, and for some reason, they bought out a little bit further. So there must have been some perceived reason that those traders thought it could move a little bit higher, but then it stalled out, and then we've been dropping ever since. So now this is what I was talking about earlier, that what could happen is that when these earnings reports come out, again, using this analogy right here, that now maybe somehow with all those earnings that come out, the perceived value could bounce up to $70. Okay, well, now that you're at $50, now that perceived value is increased, now you can be aggressively buying again. At $50, you don't mind paying $55 because you feel like you can still make money that's still going to go higher. But as you get closer to that, you're at $67 or something like that, you're going to be resisting paying any higher, and you're going to start stalling out. Okay? And you're in an area where you can start to pull back a little bit. Now we pull back, who's to say that we can't pull back into here and get back and rally right back to that quote unquote $50 level again, well, we could. And, this is definitely as of right now, this is a bullish, as we call this a bullish inside day. The official word for it is a harami. There's a lot of these Japanese names for some of these candlestick patterns because they're the ones that invented candlestick analysis. Now, this is a short-term bullish price action. That's why I keep saying maybe we rally for another day or two, because not that these work every single time. If they worked every single time, I'd only trade, haramis and engulfing patterns and hammer patterns and things like that. But they don't always work out, and but there's usually a pretty high probability. So it wouldn't shock me if we rallied a little bit higher tomorrow. But these are very short term in nature. They're not saying that you're going to get a long rally off of a harami or a bullish inside day. We could just get a little bit more of a bounce and continue to move lower. But it is possible that we rally back up into this area here, but this is why I still want to be very cautious about buying, because if what if we load up on the portfolio? We might make a little bit as it rallies up into this area there, but then if it sells off, remember, stocks will fall a lot faster than they rise. Whatever I gained on that could be wiped out in one day, or so in other words, I might not even make anything on trying to play that bounce or play that rally back up to these levels. On the other hand, what if it is a short-term bounce and it gets slammed down? Like I said, if we get another big sell-off, it's going to be a panic sell-off, because we're getting to these levels where we're breaking these support levels, which means that those professional traders will be aggressively selling if it starts to slide, and you're going to see that fear enter the market we haven't seen yet. So I don't see from these levels, I just don't see the potential reward for the risk. There's just too much downside risk here. Now, let's say that we do get great earnings coming out, the market rallies and it breaks out to new all-time highs, or it gets back up in this area where it looks like it looks like it's breaking out of this range right here. Well, then maybe I will start jumping back in, because maybe that perceived value of the market has changed, and maybe we can break out of this and move higher. But again, I just don't see it right now, and that's why I really don't want to be aggressively buying anything. Question. Yeah, these classes are recorded. For those of you that aren't aware of that, if you go to it takes a little bit of time to get them posted, but if you go to the YouTube channel, so go to youtube.com, type in Traders Pro. If you join or follow the channel, the YouTube channel, you'll see it posted there, usually within a few hours, and you can review what you might have missed. All right, so that's the S&P chart. Dow is pretty much the same. Now the NASDAQ, you could make the argument that this is here's your breakout move, and all of this is just a large ABC correction, and then maybe we could rally off of that. But there again, I'd have to see, you can see how it stalled out a lot up in this area right here. I'd have to see it get back up into that area and actually probably start to break out before I'd be an aggressive buyer. Now, it doesn't mean I wouldn't buy anything, but I still think there's more downside risk, and part of the reason for that really lies on the Russell 2000. I've talked about this a number of times over the last year, that we were in the sideways range. We had bounced off of this bottom a few times, and in fact, we had some different bottoming levels here. This was up a little bit, these were down a little bit lower. But if you draw a trend line at the lowest low of that range, we broke them through that, which means that, and you can see right here that there's a lot of downside we can still see in the small caps, and really just have a normal correction. This is a huge move up right here. A 50% retracement of that move is down here about 165 or so. That's a huge move down that is still potentially possible. I'm not saying it will happen, but I just feel like things are setting up for a much bigger drop. And a lot of times the reason why we look at the small caps, the Russell 2000, is because it tends to be a leading indicator. Now, it's not precise. For the last year, basically what it was saying that we weren't getting participation from the small caps. The small caps were stalled out almost all last year, but yet the S&P and the NASDAQ in particular went higher. They trended higher during this period. We can go back to the QQQ chart here. So during that same period, the tech stocks were rallying, but the small caps were stalling out. That was probably a signal that you may not fully trust the rally in the Dow and the S&P and in the NASDAQ 100. Now, does that mean we shouldn't have traded it all last year? No, you trade the trend. The trend was still going higher in the tech stocks and the Dow and in the S&P, so you trade that. But that in hindsight here, looking back, that was a little bit of a warning sign, and that's kind of what I'm doing right now, is saying, okay, well, now the Russell is breaking that key support level. Does it mean that things have to fall apart right here, or could the S&P and the NASDAQ rally back up to those previous highs one more time? Could this bounce a little bit back into this range? And it's possible. All that is possible, but we don't want to ignore that key. This is key. This is something that I do this from time to time in these updates, where I'll point something out that's significant, and I do that because it may not be obvious until we're looking back on it. We might be in a class, maybe we do get a little bit of a bounce, and it's 2 or 3 weeks down the road, and then we get this massive sell-off. we can come back to this, and I can come back to this and say, hey, there was our warning sign. That was the warning sign that things aren't looking so good. It didn't happen immediately, or we didn't get the result immediately, but hey, we want to make sure we're paying attention to that warning sign. I did the same thing back here just a few days ago with the S&P on that January 10th bullish reversal day. Hold on, let me get this back to our 6-month chart here. Back here, I said, we had this big bullish reversal day right here, and I said, this is a significant day. If we're going to go higher, we're going to rally up higher from here, but if it drops below this low right here, look out, because there was a lot of buying that pushed things up from here. If we break below that, that could become selling, and obviously we've broken below that. We're kind of rallying back up to it today. It's not, I don't think it's a coincidence that we're sitting right now, we're sitting right at the highs of today are sitting, or not the highs, but the current price of today is sitting right at that low point right there, trying to hold on. You know, it looks like it's got its fingers on the edge of the cliff there, trying to hang on, and it's about ready to let go and drop. Is what it's looking like to me. But all right, so again, that's kind of what I'm seeing now. I can change if it looks like things are different next week, and then the market update, I'll point it out, and you know, we don't want to be. Remember, our job is not to be market predictors. Our job is to be analysts and to see what's actually going on. We're forecasting is what I'm doing right here, and forecasts can change based on conditions. But that's kind of what I'm seeing right now, and why I'm not going to be looking to buy much of anything now. It doesn't mean I'm not going to go over stocks today. I will, but just keep that in mind that I don't think I would be. Well, most of these you're waiting for confirmation anyway, but I just wouldn't be aggressively buying in these conditions. In fact, I'd be doing the opposite. I'd be looking to any sort of rally. I'd be looking to short it or buy puts or something like that. Bonds are bouncing a little bit. They've been oversold. Those bond yields have been going higher. They backed up a little bit the last couple of days. I don't want to go through the whole market update here. Oil has been, again, this has been the strongest trend, although it did have a bearish reversal candle yesterday, which, again, sometimes you can get the first bearish sign right here, and it can try to rally a little bit further. But usually what will happen is it means that there's a pullback coming, which would make sense, because if the market sells off, you're going to see probably oil sell off a little bit as well. People don't want to see those profits they've gained disappear, especially if there's fear that gets in the market. Usually everything will start selling off when there's a little bit of a panic sell-off. Dollars looking like it's still rallying. Again, I come back to the VIX, where even with the recent selling, we just haven't seen a big spike in the VIX. Look how high it was back here in December. There just hasn't been any fear yet, and it's hard to expect a large rally in the market when it isn't rallying from a level of fear. It can still rally, but that's what makes me believe it'll stall out at those same levels again if it does get back up to those previous levels, because it didn't start from an area of fear. The chips stocks, again, they're breaking this little support area right through here. Now there's the next level of support is down here. They're trying to bounce a little bit today, but they're not doing a good job of that. Those are still, and that's you usually look at that as a signal of the NASDAQ stocks. Chip stocks usually are a leading indicator of the NASDAQ stocks. So I wouldn't be very bullish on the NASDAQ right now. Dow transportation stocks are bouncing a little bit too, but still look like they can move down a little bit further. Bitcoin's been down a little bit today. All right, so let's go over some stocks. like I said, I would probably stick to the top of the list here if I was going to be buying anything. In fact, the only stock I'm holding in the portfolio is an oil stock, and I might add another one. I don't know yet. I still don't really want to have too much exposure in these conditions here. But if you go into the hold section, a lot of these stocks, there's a lot of them that were buys that have moved back into hold. But a lot of these at the top look pretty good. CPE, switch this back over to signals here. 98 strength rank, a little bit of a bullish reversal candle today. It opened down here. It's trading up here. You do have that. If it does hold right there, you've got these higher lows. You still got higher highs. It might still be trying to work its way back up to this previous high right here. There's the CLNT right here at the top of the list, 98 strength rank, kind of the same thing. You got kind of this bowl-shaped move right here, so it came back up to that previous high and it's pulled back a little bit, and then you've got a kind of a bullish engulfing pattern today. We opened down here. If we close today, if we close right at this level, we'd close with a candle that would be engulfing the day before. You can see this a little bit better when you switch it to candlesticks if you're not used to. So a bullish engulfing is when you have it's a reversal. So you have this down move, and then here's your candle from yesterday. Here's where it opened yesterday. Here's where it closed. It closed lower than where it opened. Today it actually gapped down. It opened lower, but it could end up closing higher, and so you have it's a bullish day that engulfs the bearish candle from the day before. It trades, so the entire day before is inside of that move. It's a short-term indicator, but it's showing there's a pretty high probability that it moves higher the next day. Doesn't have to, but that's and so if you can combine that with the chart pattern, I'll show you that here in a second. It's a pretty bullish pattern there. Question: how did you get CLNT? Oh, I went under. Sorry, I get moving through this pretty quick just because it's a normal routine. We're looking under the sector tabs right here, and what we're looking for is it's showing us the sectors that are outperforming the market. These are the sectors that are performing pretty well, and really the oil, you can see it right here with the buy-sell ratio. So on the oil sector, we've got 3 times as many buys versus sells, and that's why it's ranked first right here. Look at the rest of these though. You're looking at just the opposite. They still have more sells than buys. 52 sells for 33 buys. Here's a couple that are at least 1-to-1. But so I'm looking in the sector, and I'm looking under the hold section right here, because what we're looking for, and there is a recording on this, and it should have been what you were directed to go view before, to help you kind of understand a little bit of what I talk about in class. But reason why I do that is because I can't teach the basics every class, or it'd be the same class, and once you learn the basics, you never tune in again because there's nothing new there. But we're looking at the hold section because we're looking for a stock that can go from hold to buy, that being the confirmation to get in. And then you're looking at preferably, I'd like to see a 98 strength rank or higher. But if you don't find a nice pattern or chart in the 98 strength rank, you start moving down a little bit. You can find some good ones in the 97, 96. I usually don't like to go below 90 though. but you kind of start working your way down. So if you find good patterns that have high strength ranks, those are the ones you prefer to use. But if you don't see a nice pattern, now as far as chart patterns, well, that's what I'm teaching in the class. The more of these classes you go to, you'll start learning some of these chart patterns. You learn about a little bit about candlestick. Although I've got trainings on everything. If you go to that YouTube channel, you can spend the next 3 months with all types of. I teach you about Elliott wave. I teach you about chart analysis, chart patterns, candlesticks. How to use the screener, how to use the muscle stocks, and all that kind of stuff. There's lots of information there. So this is where we got CLMT right here. Was at the top of the list, 98 strength rank. And then what we were looking at here was that it. So what I was looking at was I like the pattern here. It's got kind of this bowl-shaped move right here, and it pulled back a little bit after reaching that high. If this thing can get back up to this area here, usually it'll break out. Double tops are common. You get these double tops. They happen all the time. Triple tops are very rare. So if this does start to work its way back up again to this area, it should break out on that next move. It doesn't have to, but it usually will do that on the third try. It'll usually break out. Now, this is why you have to be the candlestick patterns. They're based usually on the close of the day, and we still have an hour and a half before the close. Excuse me. Because even while I was talking, this has dropped down a little bit to where it's not quite an engulfing pattern, but that could change. It could rally back up a little bit into the close, and even if it doesn't end up being an engulfing pattern, it's still a bullish reversal candle. Unless it comes all the way back down. But even then, that would still be a somewhat of a bullish reversal, even if it came all the way back down to near the open right here. It's telling you that what it's telling me is that buyers are showing up right here. It gapped, open lower, buyers were pushing it up. Sellers are trying to push it back down again, but it's telling you that there are buyers right here. I don't know why. I don't need to know why. It's just that let the professionals figure out why they want to buy. They're the ones moving it, and I just want to try to follow along. All right, another one in the oil sector, which is this one's already in our watch list, but Laredo Petroleum, LPI right here, 97 strength rank. Switch this back over to signals here. Was recently at a buy signal, went back to hold today, but it's a little bit of a bullish reversal candle. It's still kind of maintaining higher highs, higher lows. And again, it's in the oil sector, which has been outperforming the rest of the market. Also looks like it's kind of forming this bowl shaped. It looks like it's kind of moving up the right side of the bowl. And AR is another one in the oil sector here, down here, 97 strength rank. Kind of the same thing. A little bit of an indecision candle today. We'll call that a doji. But again, you'd be waiting for it to go back to a buy signal anyway for confirmation. Under industrial products, there's a couple here that looks pretty good. Alcoa, it's a familiar name, 96 strength rank on this one, but it looks like it's going back to a buy signal, but it's kind of consolidating a little bit right here. But again, it would take the market going higher for it to go higher. And then TWI, 92 strength rank. But this one looks like it could be wave A, wave B, wave C, kind of an ABC pull back right here. You'd want to see it go back to a buy signal though as confirmation of that, because some of these look like ABC patterns, but they keep dropping, and they're no longer ABC patterns, are actually in the downtrend. But that's one we could add to the watch list here. To add it to the watch list, you click on this little green button right here. And I want to put it in my stock specific class watch list. You want to know how to set up a watch list? There's a training on that on the YouTube channel, so you can go look that up. Click on save and go to watch list. And the watch list is just simply stocks that we're waiting for them to give us confirmation. And it doesn't mean we have to get in them when we get the confirmation, but it'll help us kind of keep track of them. And then you can put in a little alert in here by clicking this little check this little box right here. You can tell it it'll email you. I want to set up an email alert when this thing goes from hold to buy. Now, under business services, notice how I'm moving down the list a little bit. We're starting near the top. I've gone through a lot of these, and if you're wondering why I'm not picking any of these higher groups, it could mean one of two things, or a couple things. It could mean that I didn't find any patterns I liked, or we already found patterns that are in the watch list already, and so there's no need to just keep going over the same stocks again. So that could be why I'm skipping through some of that. But down here in business services, this is one we already have in the watch list. This HSON, but it has a bullish candle today. But I like, it's had this V-shaped move, and this looks like an possible ABC pattern. Correcting this will move up right here. So I would assume this is going to work its way back up to the previous high up here. And then one more under business services, this FC, Franklin Covey Company, 94 strength rank. Any of you old enough to have the old Franklin day planner back in the day? That was back when I was in college. I had my little Franklin day planner. I had to carry that big thing around with me, when now everything's on the phone. That's so nice not to. But anyway, this one is, again, it looks like you've got kind of this bowl-shaped move. It recently broke out of it, pulled back from it a little bit. And what you're looking for here is for it to hold this area and go back to a buy signal, this confirmation. The candles these look kind of bearish to me, like they can drop a little bit further, but that's why I'm just watching it. If it can hold right here and go back to a buy signal, it might be looking to break out again and go higher. A question: do you use Fibonacci for potential profit target? Yeah, you can. In those training videos, I go through different exit techniques you can use. In this class, though, I'm not necessarily. I'll look at a potential target. One of the targets I'm always looking at on these when I have stocks that have pulled back like this is I'm looking at previous highs as targets. If this does start to move up, it should at least get back up to this previous high. For the portfolio, I use just a trailing stop. So, if I got in down here, I'd probably put my stop down below here, and then if it holds right here and goes higher, then I might move my stop up to this level right here, and then I might move it up. If it breaks out, I might move it up, my stop up to this level right here. There's a lot of different techniques you can use. I always recommend you try different exit strategies. like I said, there's a whole training. I'm not going to get into those right now, but and then and then maybe there's different ones, there's definitely different ones that aren't even covered in the training, because everyone has different exit strategies or techniques they use. And then, find one that you're comfortable with, or that you like, or feel works best for you. Just realize there's no perfect trade management technique out there. There's no perfect money management technique out there. There's lots of different ways to do it, so then it becomes, the most important thing then becomes, first of all, does it work? And second of all, do you like it? Are you confident with the system you're using? I think both those are important, because you could have a great trade management technique system, but if you don't have a lot of confidence in it, or you don't like it that much, you're going to be resisting it the whole time. Anytime it's telling you to do something, you're going to be resisting it. So you kind of need to find one you're comfortable with. But you just have to understand there's not a perfect one out there. There's not. Every trader, though, will tell you this is the way to do it. This is the best technique, and that's because that's one they love to use. But it's not going to be perfect. It's not going to work every single time, or not have flaws. And so in trading, you just you can't be expecting perfection. You can't be expecting absolutes. That's why engineers usually have a hard time with trading and learning how to trade. I teach a lot of engineers. Because they come into it, they're used to laws, the law of gravity, the law of this, it works every time. I jump off a 20-story building. It's not that there's a high probability I'm going to hit the ground. It's 100% certainty I'm going to hit the ground, and they're used to those absolutes. And in trading, we don't. We use probabilities and analyze probabilities. It's just a little bit harder for them to wrap their heads around some of that stuff, and it's like, I don't want to hear different trade management techniques. I want the one that works every time. It just doesn't work that way in trading. All right, let's see here. Let's go into the portfolio here. And you can see that I have a lot of cash available. And I'm only hanging on to CLR right now. And it had so one of the things I was looking at on Tuesday was if we were to close below, I was looking for a reason to get out, because I wanted to be in cash. I just think if we have this big drop, and again, the problem is let me go back, because I think this is important. You could say, well, Jerry, why are you bailing out right here? We haven't dropped, we haven't had that massive panic sell-off yet. Why not wait until it starts selling off before you go to a cash position? Well, you can see it here. Stocks always fall a lot faster than they rise. Here you had this it took several days for it to get up to these levels, and boy, here's 3 days where it wiped out most of that gain. Here you had, look how many days it took to get up to this peak right here, and then look how fast it wiped it out. If you're waiting for this panic to start, it's probably going to be too late. You're going to be wiped out of a lot of the capital at that point. So what I'm doing here is I'm saying, okay, the market's already shown me it doesn't really want to go higher right now. That could change. All this could change. Here it tried to break out higher and came right back down. So look, it took 1, 2, 3, 4, 5, a week or so to rally up to this new high, and one day it wiped it all out. So could we look how far we dropped off those highs? I mean, that's if this closes lower than where it opened, that's going to be a very bearish candle at the end of the day. So maybe we don't get a rally tomorrow. Maybe it starts panicking tomorrow. And if it does start selling off big tomorrow, another thing to keep it, to be aware of is markets don't typically bottom on a Friday. So if you get a big sell-off on a Friday, you can almost bet that Monday it's going to get even worse. Now, again, that's a probability, so don't be like, there's no way this is going to bounce on Monday, so I'm shorting everything on this Friday. No, but that's just a common thing that most technical traders know or are aware of, and I'm just passing it on to you. And the reason why I'm passing it on to you, if you get a big sell-off tomorrow, and you're saying, man, I've been waiting to get into Tesla and it's down big and I want to buy this dip, you're probably going to get another better entry on Monday if you just wait one more day, and you'll be glad you didn't buy at that particular level. But what I'm looking at, again, I talked about this earlier, but I'll put it in the context here of the portfolio, is that I'm in essence saying, yeah, it's possible we could rally back up to these levels, but it hasn't shown me it's going to go higher than that. So do I really want to try to capture this small gain, potential gain, where I can make some money at the risk that this thing could have a panic sell-off, and within a day or so, it could be a day or two, we could be all the way down into here. It happens so quick. I'm not going to get a big, huge. Well, today, what's happening right now, what I've analyzed right now, is your warning that it could be coming. If you want to get in before it starts, these are the signals that are coming out before it starts. Because if you're waiting for it to start, it's going to be late. You're going to be a little bit later, maybe not completely late, but it's going to happen very quickly. So I just don't see it being worth trying to get a gain this small gain right here for that big risk of it dropping, and maybe even dropping even further. What I want to make sure of is that I don't miss after it drops. I want to make sure I have the maximum capital to ride it all the way back up, because I want to be getting in down here and trade this whole move back up again. I don't care too much about trying to capture this extra gain for the risk that it could be all the way back down here. Now you say, well, Jerry, what if you're wrong? What if you're wrong and we rally back up and we break out higher? Okay, well, can I get back in again at that point? Are you going to say that I'm not free to jump back in at any point? No, I can't. Yeah, but you wouldn't get in down here at the bottom. Okay, well, guess what? If that's the case, we rally all the way back here, and all these things change. Earnings are great, and the projections are great, and we're going to break out and go higher. I can still get in. I can still make money. Yes, I won't get in down at the lows, but in my opinion, there wasn't enough fear down here at the lows. There wasn't enough reason to get in at the lows. And so I'm willing to risk that. I'm willing to risk missing part of this move. I can still make money. I can still get in. I can still, if we're going to be taking off on another 2-year bull market or something, I'll be in it. And so be aware of that don't be afraid of missing out on something. If you miss this move right here and you're like, man, I just had a feeling it was going to rally and I missed it. I just missed. Oh, who cares? It's like sitting at a train station and the train, you missed the train, and then sitting there on the bench crying your eyes out because there's never going to be another train. I missed it. It's gone forever. And someone's going to walk up to you and say, buddy, just wait about 20 minutes. Another one's going to come around. Well, if you know that another one's going to come around, you're not going to be sitting on the bench crying your eyes out. You're going to be like, oh, crap, I missed this one. But guess what? Another one's going to come. I'll get on that one and everything will be fine. You have to have that bus stop mentality in the markets, because otherwise you're going to chase these moves. You're going to be on the track running after the train, hoping that you can somehow catch it, which is stupid, right? Well, it's stupid to always be chasing moves because you're afraid, because you're mad that you missed it. just wait. You'll get another opportunity. I've been doing this. I've been trading for over 20 years. If there's one certainty in the market, it's you're going to get another chance. It's going to give you another opportunity. If you're patient, you wait for it. You don't have to. Just so much money is lost chasing stuff that you're not likely to catch, or you're going to end up getting in late, or you're going to assume in a low probability that we're going to rally back up. You're going to get in anyway. You're going to ignore everything I said today because you want it. Your priority is to get in at the bottom. That is so important to you. And then next thing you know, you're down here and you're, boy, that wasn't the bottom. And then you're frustrated because you weren't patient at that point. Develop that bus stop mentality. There's going to be another bus that comes, or another train. All right. Sorry, I didn't mean to go off on that rant. So I've got one stock in the portfolio. I'm not looking to add anything, especially the way the market has faded so much since we've been talking. I do want to kind of clean out the watch list a little bit here. Some of these have gone to sell signals. Well, it doesn't necessarily mean I have to boot it out because it's at a sell signal, but some of these are oil stocks. And see, this one's at a sell signal, but I still like the potential that this is a larger ABC correction of this move up. We're still at about a 50% retracement of that move. So if it does start to move up, there could be some nice upside there. But again, if we get a big sell-off, it could look terrible as well. This one's probably, I'm going to go ahead and I might boot this one out. I like it if let me go back. On your ABC patterns, you're looking for wave C to be about the same length as wave A. It doesn't have to be exactly, but the keyword there is about. So if this is wave C, it's about the same length as wave A. If that's wave A, this is wave B right here. This is wave C. Wave C is about the same length as wave A. If wave C looks twice as long as wave A, it's probably not an ABC pattern. It's probably not a wave C. You're probably in just a clear downtrend. Or if you're retraced more than 50% of that previous move up, it's probably just in a downtrend. It could go lower. And so what I'm seeing here is that if that's wave C and this is wave A, you're looking at wave C being twice the length of wave A, and it's still dropping. And it's really here's about 50% of that move up, and you're below that. I'm going to go ahead and boot this one out. So I've got a list. I'm going to write down the list of what I'm booting out, because it'll take too long to just do it individually as we're going through right here. But and then I'll just boot them all out. I'm going to keep this one even though it's at a sell signal because I like this. This looks like a correction of this move up. You're still at the bottom area of that correction. If it starts to move up from here, it could be a possible good trade. And these are all from previous stock-specific classes. If you're new here, these are ones that we've been watching for a little while, wait for them to maybe go back to a buy signal. I got to kick out this DXYN. And by the way, some of these, they're still possible that it can find some support and move back up. And guess what? If it does, it'll show up in my scans again. We'll see it again. And this one's dropped way down. That strength rank has dropped way down too. So we definitely want to boot this one out. NVIDIA, I'm going to hang on to that one there. SM, hold that one. AR, FIX, I still hold that one. DFIN, yeah, let's get rid of DFIN. And what I'm doing here too is we don't want that watch list to be so big that it takes forever to go through. That one still looks okay. That one still looks all right. Okay, MEG, let's get rid of this one. I mean, could that be an ABC pattern? Well, again, if it's correcting that move up, it's gone way past 50%. So I don't want to keep it in there anymore. That thing does not look good. HOV, I'll hang on to this one a little. Well, I'll give it. I'll wait till next time here. But again, this still could be the correction. It is getting a little deep retracement though. Construction stocks have really taken a hit. The builders taking a hit here, but I'll give it another week here. CEIX. Yeah, I'll still hang on that one a little bit. SIG. Let's get rid of SIG. I'm not a big fan of the retail sector right now, and that's a pretty ugly drop today. I was, again, holding out a little bit of hope that might have been turning the corner here on kind of the right side of the bowl, but doesn't seem to be the case, so we'll get rid of that one. I guess get rid of CLFD, and then get rid of RCMT. HOSN, we just added that one, so keep that one. I'm going to get rid of C8, STX. Let's get rid of SNPX. I'll keep BRJ, TXT, and keep that one. TWI, we just added that one. All right, so let's go back to our watch list here and start booting these ones out. Let's see. SYNA. Sorry, this is probably the boring part of the class, but and you could probably just take off if you don't want to hang around for this. But I'm kind of just trying to show you how to manage this stuff, how to put all this stuff kind of together and run your system here. And this is what I do this is kind of the boring stuff that I do on a regular basis. Is I'll get rid of some of these stocks that no longer look very good. CLFD, RCNT. I deleted the wrong one. That was I deleted HASON on accident here. I want to get rid of this RCMT, STX, SNPX. I think I got them all. All right. Oh, you know what I wanted to add in there? Let's add it back into the watch list because I was thinking about maybe getting back into LPI again. I got out of that one. This is another oil stock. Yeah. I'm going to wait. Well, I probably wait until this goes back to a buy signal anyway. Let's wait to see if there's any follow through to the bounce today. Again, I don't want to be adding too much back into the portfolio. But I do want to put this in the watch list so that I don't miss it. And I can put in an alert. question, do I have a short watch list? No. I'm not doing any shorting in the class. Do I short stocks? Well, I usually don't short a lot of stocks. I'll use put options. Usually they're a lot less risky. But I don't teach options in this class. We're just doing straight. We're just using the Traders Pro software to just. We're mostly going to be looking at not necessarily longer term trades, but we're looking to try to ride the trend. This is a trend trading software, so we're looking to try to ride these trends, find good entry points within these trends, and then try to let them go as far as they want to go. All right. That's all I have. Real quickly here, let me take a look at S&P. Oh yeah, look at that. We've gone now lower than where we opened. We're fading into the close. Again, just look at what's happened here today, okay? So we had the sellers pushed everything down to here. The buyers tried to push things up today. We opened right here. We came all the way up here. It looked like, all those dip buyers were saying, okay, we bottomed out. We're going higher. I'm buying. And the sellers, which in this case, probably the professional traders, were selling into that. They said, all right, you want to buy? I'll give you something to buy. And they're giving them all the stuff to buy. And the market's moving all the way back down. Now it's at the lows of the day. We've already broken support. Look out. Look out. I think we're getting real close. With some of these signals, you have to be patient because, I try to teach you these things in the class as best I can when I see them. And that's what I've been doing the last couple updates. If you've been paying attention, you might want to go review them again if you're new to some of this stuff to learn. But these little subtle clues start showing up when the market's getting ready to break. And you start to get a feel like you're getting real close, and it sometimes it can take a few days. Sometimes, for instance, when we had you remember the big crash we had with COVID, about a week before, we were seeing all kinds of these little clues that were saying, man, this thing is ready to fall apart. And you could even go back and if they're still archived, go view one of those market updates I did back then. But I said, man, something big's about to happen. We're about ready to get a crash. And like I said, it wasn't immediate. I was probably about 3 or 4 days early. But then when it happened, it's like, man, it's like, here it goes. And I'm not suggesting that. I'm definitely not suggesting the same type of thing here. I'm not suggesting something major, but this is getting a feel like we're going to get that panic sell-off, and it's looking like it's getting pretty close. All right, we'll see. I'll either be a genius on Tuesday or an idiot. All right, have a great weekend, everyone. We'll see you on Tuesday for the next market update. Bye now.